The U.S. was downgraded and mortgage rates are going up. Was this ever going to end? Hey, this is Dave with the Bolduc Realty Group, brokered by eXp. Welcome to my weekly real estate market update. Today is April 4th. Looks like it's going to rain out there. Hopefully not. Hopefully we have a nice weekend going forward. Talking about key Connecticut market stats, we had 4,163 houses active on the market today. We're up 27 from last week. So we saw a little bit of an increase. 346 new listings over the last 24 hours. In line with what we've been expecting, so that's good. We had 4,064 closings in June. For July, as of right now, we're about 3,400. It usually takes a few days for all the closings to be recorded, so I expect that to go up just a little bit more. Using the June numbers, we got about a month of inventory on the shelf, so we're still in a strong seller's market. I was able to catch the National Association of Realtors, NAR, Real Estate Forecast Summit this week. Dr. Lawrence Young and Dr. Jessica Lautz presented on a lot of different topics. I picked out some slides that I want to go over because there's stuff that we've been talking about on the channel for a while now, and they give a really good picture of what's going on. So the first two show housing price changes across the country. This first one is Q4 of last year to Q1 of this year. It's just a comparison of the two, and it's either up or down. You can see the country is pretty much split in half, east versus west. The west part of the country, for the most part, down in prices. For the most part, the east part of the country, up in prices. There's a few exceptions to that, but overall, that's the general rule. If you look at the U.S. as a whole, prices were down about 1% over that time period from Q4 of 2022 to Q1 of 2023. Connecticut was up 3.2%, so a pretty strong performance there. This next chart, it shows the same U.S., but it shows from Q1 of 2022 to Q1 of 2023. So it's looking at a year instead of one quarter to the next. And we can see here that prices are up pretty much across the board. Connecticut was up 8.8% over that time period. Pretty strong showing. The Southeast and Maine led the charge with double-digit growth, 11, 12, 13%. So some really solid numbers there. Home prices in Connecticut since 2020 have risen 38%. So during that entire time, we've seen very low inventory. Even though we've seen interest rates go up and demand therefore come down, the supply is so low that demand is still relatively higher than the supply. So even though we've seen price dips over the last quarter or so, the gains are not gone. Prices are still going up. It's still a pretty strong market. And the low inventory is continuing to be a driver of the real estate market. And you can see in this next chart, they're showing a little bit of information on foreclosures. This first one is the number of mortgages that have past due payments greater than 90 days, called a serious delinquency. You can see we're around 2%. That's about the same percentage that we had well before the 2008 crash, before all the problems started to happen. So this is kind of a normal range. So that's not really indicating that we're going to get a lot of foreclosures in the future. And because mortgages have to be late before a lender can foreclose, this is a great indicator of potential upcoming foreclosures. Right now, we're not really expecting to see too much. The second chart, this shows the number of transactions, and as a percentage, it shows the number of transactions of distressed houses. And it's also low, around 2%. Distressed house is either a short sale or it is a foreclosure. Again, you can see there's not a lot going on here. So there's the foreclosure world. There are foreclosures out there, but it's not this flood, this tidal wave that's going to overrun the market. So I do want to give a shout out to channel subscriber Matt Bob. He pointed out something that is a very interesting event recently. Trucking company Yellow Corp shut down. So transportation, that sector is a leading indicator on the economy. And if trucking companies are shutting down, that's saying there might be some issues with weakness in the economy. So if we see a large company like that fold, something potentially worth noting here to keep an eye on. It does seem to confirm that the economy is slowing down. Let's hope the Fed is able to pull things back before we end up in a catastrophic crash. But I do want to say thank you, Matt Bob, for pointing that out. Some key dates here. You can see that the jobs report, it was a surprise miss. I've got it in green because it's actually good for inflation and good for mortgage rates, but it was a surprise miss. Analysts were expecting 720,000 new jobs. We got 235. So that's something that it's a mixed bag. It's good because it's showing the Fed that the economy is slowing down, and that's what they're looking for, but it's also making it tough for job people that are looking for new jobs. So that's some, mixed bag there. Next week, we're going to have CPI and PPI for July. The Fed doesn't meet again until September, but you can be guaranteed that the market is going to be paying attention. If the CPI and the PPI come in favorable again, that is going to help to continue to ease mortgage rates, which popped up high when we had the U.S. get downgraded. So here on the primary mortgage market survey, we're at 6.9%. As I said, mortgage rates jumped and the stock market tanked this week with that Fitch downgrade. The lower ratings for the government means that they could end up having to pay higher interest rates when they issue new bonds, and that would have a knock-on effect to other things, including mortgages. So the weaker than expected jobs report, that has had a cooling effect on mortgage rates. We expect that to continue, and we're also looking forward to the CPI and PPI throwing a little water on the mortgage rates as well, cooling things down. The rates are forecasted, mortgage rates are forecasted to come down. We will probably not see 3-4% anytime soon, but high fives, low sixes is certainly in the cards. So just keep an eye on that, and remember that there's always the opportunity to refinance. I hope this is helpful. Questions, comments, feedbacks are always welcome. Throw them in the comments down below. Have a great weekend.